In this video, traders, we're going to look at, would you take this DAX short trade? Stay tuned. Hey guys, a warm welcome to you. Alright, so in the series of would you take this trade, I want to look at the DAX. Now let's look at the overview of the DAX first and look at it from a daily chart perspective without trying to give too much away. Okay, so daily chart perspective of the DAX at the time of filming this, we have push off the lows, pull back up, and we are pretty much kind of now coming off that high. Right, we've come off that high, and as we start to take the trade, or as we look at the trade, we are at 11,713. So we are around about here. Okay, so we are below some key levels, and we're looking at what's gone on. So let's have a look at the 1 minute chart and see what's happened. So I want to zoom out a little bit here without, again, I'm just trying not to bring in too much in and to give some context. So we've gapped lower after some news in the US that's caused the US futures to dip. And what's happened now is we've opened at 8 o'clock UK time. I'm going to put that in here. So here's the open. Why you keep telling me I've changed my layout, I haven't. Okay, so we've gapped lower. Imagine the gap lower, drive down. Now we've put a low in. We've rallied back up. Okay, we've pushed back up. It's a 24-hour VWAP, so not really that important. We haven't taken out the high yet, and now we've pushed down to the lows. I'm going to zoom in a little bit more here for you without giving too much away. Right, we've pushed down to the lows with 1, 2, 3, 4, 5, 6, 7, 8 red candles. Pretty aggressive, right? Especially from the high point. So 11,760 down to 11,710 very quickly in 7 or 8 minutes, whatever it was, with no pullbacks. And now we're pressing at the low. Now, we get a little wick at the low. Now, I'm not thinking long on this because I just think that the long may have to come when we've seen some strength as opposed to trying to be clever and buy a double bottom. I've talked about this before, guys. I think that the long trade on a double bottom works better in an uptrend when we're pulling back as opposed to now in a downtrend and we're kind of gapped down and we're pushing lower. So the thesis on this is, would you take the short trade or not? Now we start to pull back. Let's have a look and see what we've got. We start to pull back and we start to put in these little things. Now to me, if I'm here and I'm looking at this, then I'm thinking this is not a bad short because we've held at the low, but we've had a really aggressive move lower. The volume's been high. We've gapped down loads. We're below the prior low. The US futures are getting hammered. There's news flow. End of the month. Lots of stuff to say that this would really kind of spit its dummy out and go through the floor. And we see what happens here. We push back again. So now we're looking at this and thinking, okay, this isn't looking quite as nice. That first candle's alright. At that point, you're thinking, I might take this short. Second candle, you're thinking, okay, but now we get a little red one coming in. And I took this one short. I decided to go short on this, thinking we're going to push through to the lows. A thesis was that we would capitulate through the lows, but to close out into the lows, a nice little kind of 30-point scalp trade. And what convinced me on the short side again was the backdrop of the whole thing and this nice drive lower. Now let's consider the bull side for a second. So the bull side for a second is that we have come quite a long way. The bull argument, should I say, we have come quite a long way. We have found support after, and it stopped things abruptly at that level quite significantly. We have pushed back quite a lot from this low, and this is the point that I think is the biggest one. You know, we've pushed lower and we've had quite a bit of pushback. We've almost taken back out the high only by sort of 15 ticks or so. So we've undone maybe what, 70% of that move. So it's not like we've only done 25 and we're sitting at 25% and we're about to roll over. Yes, that's bearish, that drive down there, but this isn't that bearish at all. And so those are the two sides of the argument. So the question for you is, would you take this short or not? Okay, let's see exactly what happened. So the market then stagnates a little bit. This is so far, it's okay. You're not too worried if you're in the short. You're thinking, okay, fine. Now we start to get this scenario. This does not look good, and this has me out of the trade. I do not want to see this kind of stuff above that high there. There's my wick. Very quantified risk on this deal, which is what we want anyway. If we're trading, we're never going to take. We never want to be in it when it pops above that. You know, if we're shorting it around here, then the thesis of the trade is gone. So that pings you out. And actually, if we look through what actually did happen, it did finally flush through the lows, and it gave us what we would have wanted, which was that 30-point flush. And if that had happened there, it would have been textbook stuff. So looking into this, and also interested to see what you guys said you were going to do with this one. Interesting thing with this, where's the red flag? Obviously, we can't always go and say, yeah, well, definitely wouldn't have taken this. Would you have taken it again? I think the thing to watch out for on this is the fact that we've moved so much. Okay, I think this is the kind of missing piece. We've gone from here to here in one opening drive move, pretty good. We've pulled back. This is okay so far. Really now, you don't want to see anything from this side. This is all okay, and really from now we should be starting to test the lows, maybe a little bit closer. Anything more than that, especially pushes back up, are a bit of a red flag, right? Because we spend more time in an uptrend than we have in a downtrend, and often we forget about the duration we've been in the trend as being quite important. So the more time in an uptrend than a downtrend, we push back quite a bit. Now, the only thing that I think was a really good bear sign was this heavy selling program that was hitting the market here. Bang, 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 all the way to the lows, and it kind of paused a little bit. Was that a bit high pullback off there? For the DAX, no. For the Dow, maybe. It would have been better off just this one candle, and then it would have been a nice short for an aggressive move lower. You've seen that, and maybe closed into the buy stops. And maybe actually, if you'd seen that straight away on here, you probably would have closed a few and looked to hold a little bit more, because that's really, really weak. So I think the red flag on this is it's a good trade in terms of it's a good kind of thesis, and it did go through later on and push through the lows, and that was the thesis was fine, but it's still two-way trade. So just because the thesis is there doesn't mean it's a good trade, right? It's still two-way trade at this point. It's still down, back up, so 7% of the move, down, back up. You know, at this point you're saying, okay, well, it's really range bound, even though it's slightly declining in trend. It's not a clear supply-demand imbalance as it looked like earlier, and the red flag was really from here to here. So the point of this, guys, is that obviously we're doing the exercise and see if we can spot clues that will help us in the future. But the point of this is that if a market is truly in breakout mode, truly in testing new levels mode, the retracements aren't going to be that long or that deep, or they shouldn't be. If they are, and if you look at this, and this is why I kind of drew this a little bit earlier, is you start to then see really it's a channel. It's not necessarily a breakout, it's a channel. And if you're starting to look at this, you start to go, well, there's my channel. Okay, I'm approximating. I know some of you guys like to draw it a bit more accurately, but you get the point. At this point here, you're thinking, okay, well, you know, we're in this little channel here. And so really, the theory of this is that you're selling in the upper end of the channel. If the thesis was to break through the low, then it's sell at the upper end of the channel, not try and force stuff in really the middle of the channel, which is what this is. And so I think the summary of this, guys, is just be careful when we have what could be range bound environment, and trying, even though we're down a lot and we've gapped down a lot and everything's looking very, very bearish, and then yes, we did drift lower later on, using a kind of aggressive strategy selling into lows or near to lows is not really the right strategy to do when you isolate the pattern and look that it's actually really more a range bound pattern despite everything. It might develop into more of an aggressive breakout type pattern, but it's really a range bound pattern that's slightly pushing down. And once you recognize that, then maybe a little bit more cautious, and you may be like, listen, unless the price comes to me and I get it at the highs of this range, I'm going to be prepared to miss out on it. And that's when you've got to kind of put your FOMO under control. Anyway, guys, if you like this kind of stuff in the series, give it a thumbs up and comments in the comment section below what you think about this. And I'll see you next one. Take care. Bye-bye.